Hey there, savvy investors and curious minds. Today we're diving deep into the world of smart investing and uncovering the secrets of how top investors avoid those pesky, costly mistakes that can derail even the most promising portfolios. So, grab your favorite beverage, get comfy, and let's explore some game-changing strategies that could take your investing game to the next level. Let's kick things off with a fundamental truth. Even the most successful investors make mistakes. The difference? They learn from them and develop strategies to avoid repeating those errors. One of the biggest pitfalls many investors face is letting emotions drive their decisions. Fear and greed can be powerful forces, often leading to impulsive buying when markets are soaring or panic selling during downturns. Top investors know this and work hard to keep their emotions in check, focusing on long-term goals rather than short-term market fluctuations. Now, let's talk about the power of diversification. You've probably heard the saying, don't put all your eggs in one basket, right? Well, it turns out this age-old wisdom applies perfectly to investing. Spreading your investments across different asset classes, sectors, and geographic regions can help mitigate risk and smooth out your returns over time. Warren Buffett once said, diversification is protection against ignorance. It makes little sense if you know what you are doing. But for most of us mere mortals, a well-diversified portfolio is a smart move. Speaking of Buffett, he's a big proponent of investing in what you know. This doesn't mean you need to be an expert in every company you invest in, but having a solid understanding of a business's fundamentals and competitive advantages can give you an edge. Take the time to research and understand the companies you're considering investing in. It's like dating. You wouldn't commit to a long-term relationship without getting to know the person first, right? Another crucial aspect of avoiding costly mistakes is having a clear investment strategy and sticking to it. This means setting realistic goals, understanding your risk tolerance, and creating a plan that aligns with your financial objectives. It's easy to get swayed by the latest hot stock tip or market trend, but successful investors know the importance of staying the course. Think of it like a road trip. You might encounter some detours along the way, but keeping your destination in mind helps you stay on track. Now, let's address a common misconception: the idea that you need to constantly monitor and trade your investments to be successful. In reality, overtrading can be a major drain on your returns, racking up fees and potentially triggering unnecessary tax events. Many top investors advocate for a buy and hold strategy, focusing on quality companies with strong fundamentals and holding them for the long term. It's like planting a tree. You don't dig it up every few months to check on the roots. You give it time to grow and flourish. One often overlooked aspect of successful investing is continuous learning. The financial world is constantly evolving, and staying informed about market trends, economic indicators, and new investment opportunities can help you make better decisions. Consider setting aside time each week to read financial news, listen to podcasts, or attend investment seminars. It's like sharpening your tools before tackling a big project. The better equipped you are, the smoother the process will be. Let's talk about a mistake that even experienced investors sometimes make: falling in love with a stock. It's easy to become emotionally attached to an investment, especially if it's performed well in the past. But top investors know the importance of regularly reviewing their portfolio and being willing to cut ties with underperforming assets. Remember, the stock market doesn't care about your feelings. It's all about performance and potential. Another key strategy for avoiding costly mistakes is to have a clear exit plan. This means knowing when to take profits or cut losses. Many investors struggle with this, either holding on to losing positions for too long in hopes of a turnaround or selling winners too early out of fear. Setting clear criteria for when to buy and sell can help remove some of the emotion from these decisions and keep you on track with your overall strategy. Now, let's address a topic that might make some of you squirm: fees. High fees can eat away at your returns over time, and many investors underestimate their impact. Top investors are meticulous about understanding and minimizing the fees associated with their investments. This might mean choosing low-cost index funds over actively managed ones, or negotiating lower fees with financial advisors. Every dollar saved in fees is a dollar that can continue working for you in the market. Here's a personal anecdote. When I first started investing, I was so excited about a hot tech stock that I put a significant portion of my portfolio into it without doing proper research. Needless to say, when the company hit some bumps, my portfolio took a big hit. It was a tough lesson, but it taught me the importance of thorough research and diversification. Lastly, let's talk about the power of patience. In our fast-paced world, it's easy to expect quick results, but successful investing is often a slow and steady process. As the saying goes, the stock market is a device for transferring money from the impatient to the patient. Give your investments time to grow and resist the urge to make drastic changes based on short-term market movements. So there you have it, folks, a shallow dive into how top investors avoid costly mistakes. Remember, investing is a journey, not a destination. It's about continuous learning, staying disciplined, and making informed decisions. By incorporating these strategies into your own investing approach, you'll be well on your way to building a robust and successful portfolio. Before we wrap up, I'd love to hear about your investing experiences. Have you made any costly mistakes? What strategies do you use to avoid them? Drop a comment below, and let's keep this conversation going. And hey, if you found this video helpful, don't forget to give it a thumbs up and hit that subscribe button for more investing insights. Until next time, happy investing.